Let's review the overnight export sales activity because it has been quite a string we have had now for a week or two. A lot of sales to China, and this morning was really no different. We did have another batch of sales to China, but it was, well, in this case, one sale of soybeans of 126,000 tons, and that was earmarked for China. However, we had another sale of soybeans, 180,000 tons. Don't really know where that one's going. Could be China, could be somewhere else. Unknown destinations is the category. And the same story applies to corn. We sold some corn overnight, 207,880 tons, unknown destinations, so it may be a little while before we figure out who that actually went to. Lots of pressure in the corn market today as we look at our current trade. With the quotes provided by bar chart, we show September corn now at $3.23. That is down 5 1/4 cents, and we'll find out here in a moment if memory serves me correctly. I think contract lows on September are something like $3.15. Maybe we'll find out here. December down 4 1/2 cents at $3.31 1/4. We have also had some corrective action apparently in the soybeans today, with the August down 6 at $8.97 per bushel. And we have November down 7 at $8.93. So everything is under $9 right now in the soybean trade. Let's bring in Brian Hoops. He is the president of Midwest Market Solutions in Springfield, Missouri. So what's the deal on the corn? Let's go back to that. On the September, are we getting in the neighborhood again of kind of threatening the contract lows?
Yeah, good morning, Marlon. Looking at that September corn, last week's lows were 22 3/4. That's the same low as what we have today. So we're testing the lows from last week after a couple-day rally, giving most of that all back. And, you know, a break of that support, a close below it, sets us up for that test of that 315 area that you talked about. That's a contract low that was scored back on April the 21st. In June the 26th, we came within 3/4 of a cent of that. So we're seeing a lot of support at 315, and that's really your next major level of support if we break through this 323 area.
How safe do you think that is?
I think we're going to go down and test that 315 by the end of the month of July into early August. We'll have a lot of seasonal weakness, and a lot of producers selling needs to hit the market yet, and that's going to hit the September contract way on basis levels. And I imagine eventually we're going to take out that 315 support area. I think that will make new contract lows as we get ready for impending harvest, and that harvest could be rather large if the forecasted rains materialize. A lot of producers are missing out on it in more northern areas. Central Iowa is still pretty dry, but some areas that are receiving these rains are just going to have some outstanding type yields.
One thing I wanted to point out, and I had noticed it in our last half hour, we have the U.S. dollar kind of sinking right now. This could be significant. So right now you have your September futures on the U.S. dollar index at 95.320. That is down 452 points today as it continues to just kind of erode as we go. We're now into the lower 95s, and that could be somewhat significant here. So we'll have to keep an eye on that one as well. We'll talk more about that and other things such as livestock trade with Brian Hoops when we come back in just a moment. Natural gas prices creeping up just ever so slightly right now. We are talking with Brian Hoops of Midwest Market Solutions in Springfield, Missouri. We were talking a little bit ago about the value of the U.S. dollar and how it's declining again today. And look at the past 6 months. Right before it had that huge spike there in late March, it was preceded by a big-time drop. And that seems to be the low that may be the target here for the dollar. Brian, do you know how low the dollar got at that point early in March?
Yeah, that was right before the market really took off and rallied. About 94.78 was the low that we had made at that time. So we're not that far away from testing that low once again, Marlon.
So do you think that this overall is going to be perking up our ag export activity or not?
It tends to. As we go into the fall months, we get a weaker U.S. dollar. We tend to see some strength in our exports. In fact, we've seen a lot of strength here recently. We've had several days of consecutive sales of soybeans to China or an unknown destination, and we're picking up our corn sales as well after several sessions. We've had some pretty big sales to China, including this morning's sale to an unknown destination.
How much impact would that have on our livestock trade? Now, as we look at live cattle, we're down $0.50 on the August at 101.77 right now per hundredweight.
Yeah, the pork exports are really, the pork market's really dependent upon exports. The beef is more of a domestic demand trends, I feel, and we're more in tune with what the economy is doing. If we're reopening the economy, getting back to work and eating out, that should be beneficial for our beef market. So, concern I have for the cattle market right now, you have August cattle at about 102, just below that. The cash is trading at around 95. We're getting closer and closer to first notice day against that August contract. At 102, there's going to be a lot of deliveries against the futures. So I think the futures market probably needs to come down, align itself closer to the cash where it's trading at, so we don't see as many deliveries as we go into that first notice day time frame.
Looking at our feeder cattle trade at the present time with these quotes provided by Bar Chart, we have August down 7 cents. It's at 141.52, but all the other months are just a little bit higher. October, for example, is up 20 at 143.17. On the lean hogs, Brian was talking about them a second ago. We have August now 47 higher at 50.87. October 55 higher at 49.75. Real quickly here, Brian, do you think the contract lows are now solid?
Well, hopefully that's the case. We're seeing some really strong export business, especially to China. They've been a very strong buyer throughout this marketing year, and that has probably enough to keep us off of falling to contract lows. We need that spark to see the funds short covering to really lift us in prices. But I think as far as our contract lows go, they're probably in place at least for the summer.
Brian, thanks. I appreciate it. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Christina?